Hey everyone, welcome to another video by Optionables. My name is Saket, and in today's video we are going to discuss more about what happened to today's trade. So I'm not going to talk much about the market summary because as all of us know, so today was a very bad day for the market. Market opened gap down of around 250-260 points, later just continued falling. But one good thing is that we saw some support come towards 15,800. So this level has acted as a very good support earlier as well, and again today also it proved once again that 15,800 is a very strong support. So now when we look at the FII DII figure, it is pretty evident why the market has fallen, because FII sold for close to 4,800 crores. So today all the sectors were in red, and especially the technology sector, the index itself was down by close to 5.5%. And Infosys, TCS, you name it, everything was down. Even Wipro, HCL, Mindtree, everything was down close to 5 to 7%. And the top gainer today, when everything else is taking such a big hit, then on the other side we had ITC, which actually held the market. So ITC was up by 3%, and it showed that it is always going to move against the market. And when everything is rallying, ITC is like, okay, I will just stay at 200. And when everything falls, ITC is like, okay, this is now my time to go up. We saw some good up move in ITC. So now we'll be quickly moving to today's trade and what exactly happened. And yesterday, if you remember, I had a lot of naked put options sell positions. So we had sold 33,000 puts, we had sold 33,500 puts, we had sold 16,000 puts, we had also sold 15,700 puts. So while we did the yesterday's video, I had mentioned that if market gaps down around 100 points, then it is going to be pretty okay. If around 150, 170 points, then we are going to lose around 3 to 4 lakh. But the market gapped down around 270 points, and to be honest, I was not expecting such a big down move in the market. And yesterday I was really scared looking at the US markets, because US markets is falling continuously down, and every rise in US market is sold into, and Nasdaq is down almost 5%, even S&P and Dow Jones is down by 4%. And I was really scared, because if this sell-off continues, and what if we end up opening 3% or 3.5% lower. So I was sitting in the night and calculating what might be our loss, and so I thought, okay, even if we are opening around 350 points lower, we might end up losing around 20 lakh. So I was ready for this loss, and I also tweeted on Twitter saying that, okay, tomorrow I'm ready for 3 to 4% loss, because the market is going to open gap down. So luckily market opened 250 points gap down, and as soon as the market opened, we had a loss of close to 8.8 lakh. So this is where we opened, and to be honest, even though I had a loss of 8.8 lakh, it was a sigh of relief because I was expecting around 20 lakh, and I was also planning how to recover this 20 lakh, but it was only 8.8 lakh. So I had a sigh of relief. Oh, thank God, I just lost half of what I expected. So now it was the time to recover. So before I move on to what exactly happened to today's trade and how we started to take trades to recover this loss, I will talk more about the psychology aspect and how we really ended up in this position. So what really happened in the last week is that we all know that market shot up from 15,700 all the way to 16,400, almost around 700 points, and it also reversed 700 points. So on the other hand, Bank Nifty shot up from 33,000 all the way to 34,800, again reversed around 1,500 to 1,700 points. So it was a complete zigzag move throughout the week. So I wouldn't say throughout the week. If you see on a weekly basis, it was a complete V-shaped move. And what really happened in this up move is, initially we were having a 33,000 and 35,000 short strangle positional. So this was the short strangle what we had. So then what happened as the market started to move up, so I started adding additional 33,500 puts. Then when further the market moved up, I added 34,000 puts. So now I had 33,000 puts, 33,500 puts, and 34,000 puts, and on the upside I had 35,000 calls. So yesterday, since we were held up with some work, so we had something exciting coming up, so there a lot of time went in those meetings, and finally we also had this workshop where certain preparations had to be done. So I really didn't bother much about the positions, thinking that it is safe. The thing is, this 33,000 puts hardly had somewhere around 6 to 7 rupees premium, and we never hold such puts at all. So when something is trading at 1 rupee, 2 rupees, we never intend to hold that at all, because hardly it will end up giving you just around 5,000, 6,000 rupees. But the risk what it has is huge. And even 33,500 puts was hardly trading around 20 rupees, and we had sold it when it was around 400 rupees. So I just left all these puts as it is without even touching them, because we were held up with some other work, and I felt that okay, the market is anyways above 34,000, so 34,000 is a strong support. So I never really bothered to look at these positions. And this is the big mistake what we did, and we learned a proper lesson not to do this ever again. So it is good that we learned this lesson, and it is also good that we didn't end up losing a lot, thankfully. So it was purely by luck, I would say. Even if the market had gapped down further 1%, then the losses would be huge. And we learned a big lesson that always keep an eye on the position. When we have realized most of the profits, just cut all these positions and have a simplified position. So it is okay to go naked. And I would want to tell you one more thing. We have gone naked many times, even positional. But the thing is, we have never gone more than 1,000 quantity naked. And there is a reason behind that. Maybe this is something which we had done around 6 to 8 months back, where we had gone 5,000 quantity or 6,000 quantity naked. And that time also we had taken a small hit because Bank Nifty had gapped up or something. But apart from that, we usually don't go more than 1,000 quantity naked. So that is the maximum we go, because even if Bank Nifty gaps down close to 1,300, 1,400 points, the loss would be around 10 lakh, which is 2% of our capital, even with a gap down of around 1,300, 1,400 points in Bank Nifty. But yesterday, since I already had these positions, I started adding, and finally I had close to 5,000 quantity of Bank Nifty put. So 1,000 quantity at 34,000, which I had added yesterday, and apart from that I had 2,000 quantity of 33,500, 2,000 quantity of 33,000. So totally 5,000 quantity of Bank Nifty put. So you can actually go back to yesterday's video where I have actually shown you the position book what we hold. So you can take a look at there. And this is a big mistake which we should have rectified. And on the other side, I don't have any call positions at all. I just have 35,000 calls. And luckily yesterday, along with 34,000 puts, I had also shorted some 34,500 calls. But the major call what we had was at 35,000. So this was the position what we were holding, completely biased on the upside. So nothing to protect on the downside. And market opened huge gap down, and we were hit around 8.8 to 9 lakh in the opening itself. And now I'm going to go to screen recording, and I'm going to discuss how we actually ended up trading today. So from the 9 lakh loss, we got it down to close to 2.75 lakh loss. So we recovered in and around 6.5 to 7 lakh throughout the day. So I'm going to explain what are the logics behind the trades what we took, and also how we ended in this position. So before moving on to the screen recording, I hope that this lesson what we learned is also useful to you, because we have lost a lot of money making this mistake, and this video is to make sure that you know what mistakes we have made, so that you don't end up losing money by making the same mistake. So always keep this in mind. Do not go naked positions over a particular position size. Let's say you're trading with a X amount of capital. Don't go too much quantity naked overnight. So if it is a smaller quantity, it is absolutely fine, because even it should be in such a way that even if a Bank Nifty or Nifty is opening around 8 to 9% gap down, it shouldn't be more than 10% of your capital. So with 8 to 10% gap down, it shouldn't lose more than 10% of the capital. In such case, that would be the ideal position sizing to go for. So, and one more thing before we move on is that we have also sent the e-pass to everybody who will be coming to the workshop tomorrow. So there are around 108 passes which have been issued, and you must have received this in your mail. If not, please revert back to us immediately to optionablesllp@gmail.com if you have got the confirmation mail earlier and you still haven't received the e-pass. So tomorrow we'll be having the workshop from 9 AM up till 5:30 PM, and we'll also have the recording, and we'll be putting out the glimpse of this recording. And also tomorrow we will not be taking any trade because of this workshop. So we'll maybe enter simple trades later on. So with this, we'll now move on to the screen recording and try to understand what were the trades we took and what was the logic behind taking these trades. And meanwhile, if you're liking the video, then do not forget to hit the like button, share this video and subscribe to Optionables. Thank you so much for joining. Hi everyone. In this video, we are mainly going to discuss the psychology aspect of the trade what we took today and how did we actually end up recovering most of the losses what we had. So if you remember, I told you as soon as the market opened, we had a loss of somewhere close to 9 lakh and slowly we ended somewhere around 2.7 lakh. So I had also posted the screenshot on Twitter. So the most important aspect here is how did we actually get through the trades. So you can see here it's around 2.71 lakh. M to M total is around 2.71 lakh negative. So first thing what we should understand here is as I told you, we were expecting a huge gap down and a huge loss. And as soon as the market opened and we just had around 8-9 lakh loss, first thing which went in my mind is that square off all the positions. There is no point in holding these positions because first of all, the loss is much lesser than what you have expected. And hence we have to use this opportunity to come out of the position as quickly as possible. So right after the market opened, I ended up closing all the positions because once that is done, it will help me think fresh. So with a fresh mind, I can think what next has to be done. So after I squared up the position and I observed the charts for a while, and two things were quite clear. Yesterday itself, I had discussed that 34,000 is going to be a strong support for the market. And now the markets have gapped down so much. So it already gapped down around 1.6, 1.7% or maybe even closer to 2%. And one thing that was sure is 34,000 is now going to act as a very strong resistance. So that means the chances of market going above 34,000 is fairly less. So I also wanted a confirmation for which I also looked at the open interest. And as you can see here from the word go, so this is at 9:15, there was a huge spike in 34,000 call option open interest. So up until around 12 o'clock. But the thing is, I actually ended up taking it quite early around 9:30, 9:45 itself. And there was a huge decline in 34,000 put option open interest. So when I remove this intraday, what we can see is that yesterday's closing put option had an open interest, that is 34,000 put option had an open interest of 2.7 million. And when we come to intraday, and you can see hardly by 9:35. So it had come to almost around 1 million and it quickly dipped below 1 million right after that. So more than 60 to 70% of the open interest was cut down. Whereas here we saw some huge writing of call. So I started shorting 34,000 call option. So this was the first thing what I did. So now my loss was around 9 lakh. The idea was very simple. The moment we hit 10 lakh, cut all the positions. So don't hold any positions, just cut all the positions. And after that, as you can see here, so the market started taking support around this level. And there was also some kind of resistance which the market took at 33,600, 700. So one thing became very clear that at this range, the market can actually end up consolidating for a while. So I didn't know how long, maybe around half an hour, 45 minutes. And the IV of the options were crashing at a very high rate. So as the Bank Nifty opened, the premiums were around 220 and 230 and the IV was crashing at a very high rate. And that's the reason, without wasting much time, I entered a 33,500 short straddle. And this very immediately started to give us a very good decay. So here I entered somewhere around 3k quantity. The reason was simple. So here we saw some kind of a resistance and here the market took support and I expected some kind of consolidation to happen between this range. And the IV was very high, the premiums were very high. It was a good opportunity to enter a short straddle. So Right after this, I ended up entering a 3K quantity, 33,500 short straddle, and now very immediately my losses started to decrease because of the 34,000 calls and this 33,500 short straddle. My loss came down to almost around 7 lakh. So this was the time when I booked my 34,000 calls. Also posted on Twitter saying that so right now we have a loss of around 7 lakh, and the moment we reach around 8 lakh, I'll be cutting off all the positions. So you can see what we have done here. So initially our idea was the moment we hit 10 lakh, we are going to cut off all the positions. So since we have recovered some amount, now the level has changed to 8 lakh. So the moment I hit 8 lakh, I'm going to cut all the positions. And furthermore, what happens is the market right over here consolidates for almost around 2.5 hours. And at this time, you get a very nice theta decay. And one thing would be very clear. So as I see the market break either the low which was made here or the high which was made here. So this was around 33,650 and this was around 33,400. So if I see any break either on the upside or on the lower side, then I'm going to change my position. So here after some time we started to see that market ended up breaking 33,400. So this was our lower end what we had kept in mind, and the market broke 33,400. So once this breaking of 33,400 happened and this red candle came, it was more or less clear that 33,600, that is this particular high, is going to act as a very strong resistance for today, because the market has broken the day's low. So this was the day's low. The market here has broken the day's low, and hence the day's high is definitely going to be acting as a very strong resistance. So right after this happened, I aggressively started to short 33,600 call option. Very aggressively started to short this call option. And even though the market came down, went up and came down, the decay was happening at a very high rate, and this helped me gain or recover most of the losses, because in this kind of a market which was going down, going up, going down, usually you don't see a lot of decay happen up until the end. But since the IV had spiked so much in the morning itself, there was insane amount of decay from the word go, right? So then while this was happening, now my loss slowly started to come down. So the thing is, now my loss started to come down from 7 lakh which I was having to around 5 lakh. At this point, when my loss came down to around 5 lakh, 5 to 4.5 lakh, so few things were quite clear from this point, that I don't have to hold the same position and adjust, because I have recovered half of what I have lost, which means I have done a fairly good job, because out of 9 lakh, I have now come down to 4.5 lakh, which is a quite acceptable range. So I ended up again squaring off all the positions. So I particularly feel that at this point, there is no further point in risking, because you have already recovered. So now I have 4.5 lakh loss left with me, and all the positions are squared off. And now the thing is, I have time to think and re-enter again if necessary. There is no compulsion that I have to re-enter. It is only if necessary I can end up re-entering. And here what actually ends up happening is that after some time, okay, I decide based on how the market was moving. So since this was a very good support and it had broken, and the market tried to break here, it was not possible. The market tried to break here, it was not possible. Now it became more or less evident for me that 33,400, which acted as a support, now acting as a resistance, can remain to be the resistance for the entire day. And not just that, it also became quite clear that market is going to find good support at lower levels, because Nifty, there was aggressive amount of put writing at 15,800. So even though Bank Nifty we didn't see so much of put writing, but Nifty it was pretty much more or less given that 15,800 is going to act as a strong support. So if Nifty is not going to fall below 15,800, that means Bank Nifty should also have a limited downside. So this was the logic what we had in mind. So now what happened? I ended up creating a 33 400 and 33 200 short strangle. And if I had actually kept this till the end, today I would have ended with maybe much more than positive 1.2 to 1.5 lakh. So I could have actually done that. But what ended up happening is, so I entered 5k quantity of 33 500 and 5k quantity of 33 200. So the perfect trade for today, and if held till the end, so this would have easily given us we could have easily ended in positive, forget about recovering the loss, easily around 2 lakh positive, because we had such huge quantity. So now the market was again consolidating right over here. So towards the end, especially around 240, so we saw market break 33 200. And at this point, our loss had already come from 4.5 lakh, had come to around 3.2 lakh. And at this particular point, I was not sure if it was a good thing to hold or not, because we have come all the way from 9 lakh to 3.2 lakh. And I didn't know if I was supposed to risk this profit and go for a bigger gain. So the thing is, once I saw that Bank Nifty, even though it just broke a single candle, I was not confident enough to hold this position and carry it. And that's the reason I decided, okay, like forget it. We have already come from 9 to 3.2, and there is no point in trying to be so aggressive and again go back to 6 or 7. And I ended up booking everything. So finally, I booked a total loss of 3.2 lakh. And the sad part is, right after I booked, the market bounced and it came exactly at the center of 33 400 and 33 200. And towards the end, I took small penny trades, which helped me recover another 50k. And that's how we ended around 2.7 lakh net loss. So the logic here was quite simple. So we first squared off all the trade to keep our minds calm, and then we first started looking at the charts. We identified the point of support and resistance where the market was actually taking, and we created a short straddle. And the moment we saw market break, we tried to adjust the short straddle, and beyond a point when we felt it was uncomfortable holding, we exited everything. Again, we took a fresh trade where we recovered certain amount, and when that also became little uncomfortable to hold, we exited everything and recovered most of the losses what we had. And this was the whole day's trade. Today, anybody who did short strangle or straddle would have made a huge amount or very good profits. The reason mainly being it was a very good expiry, very easy to manage positions, and also if your psychology was right from the beginning. So if we didn't have the overnight position, I am pretty sure I could have easily pushed further, because here what happened is when we had 3.2 lakh, I was not sure whether I was supposed to push it further or not. Imagine I didn't have this loss at all from the beginning. That means I would have had profits somewhere around 6 to 7 lakh. And I could have easily let gone of another 3 lakh profit and pushed for further 6 or 7 lakh. So that would always be a possibility. But anyways, these are something which can be discussed in the hindsight. So at that time, what decisions we take will be completely depending on our mindset at that particular point. So this was today's trade, and I hope this video was insightful and you got something to learn from this. If so, then do not forget to hit the like button, share this video, and subscribe to Optionables. Thank you so much for joining.